Good afternoon, everybody. John Hopkins is my name. Today is about Brisbane, and importantly, we need to talk about Brisbane and why we think it is or it isn't a major metropolis in regard to its property markets. But before we do, everybody, I'd just like, for those of you who don't know us, just to briefly tell you about our organisation. Firstly, we established the John Hopkins Group in 1980, so that was 34 years ago, and it's with some level of happiness and pride that I can tell you that our corporate goal, which was coined a year after we started the corporation, and is the goal of our organisation is to assist and motivate individuals to be financially well and to become financially secure. And the aim of our organisation was to provide access to all the products and services that individuals would need in order to achieve the goal. Now, to say to you that our goal is exactly the same today as it was 33 years ago, as I said, gives us some happiness and some pride. So 34 years we have in the John Hopkins Financial Services side of our organisation a tax and accounting business, we have a financial planning business, we have a finance business, and we have a property advisory business. Since 1980, our clients have purchased in excess of $4.5 billion worth of property investments. We've managed more than 4,000 tenancies at the one time, and we've managed more than 500 owners corporations at the one time. I've personally consulted with thousands of individuals about their financial circumstances, and if I then add in the different advisors, financial advisors and the property investment advisors that have worked in our organisation and do work in our organisation, that would be thousands and thousands of Australians that we've consulted with over that 34 years about their financial circumstances. So just to give you a bit about our organisation, but that's not really what today's about. Today is very much about Brisbane. So let's start with some fundamentals. Now, during that 34 years, we've stuck to some really rigid philosophies in regard to what is and what isn't a quality property investment. And firstly, I'd like to go through some of those basic principles, and the place to start is with the word investment. My father, who was a gorgeous man, passed away last year, worked in my organisation after he finished being a medical practitioner, and he worked with us for a number of years, and one of the things that Dad used to do was write my speeches and write different articles for us in addition to seeing clients. And I remember Dad came to me one day and he said, "Son," he said, "do you know there's no synonym for the word investment?" So, ladies and gentlemen, if we think about how many times the word investment would be used in today's Financial Review or the Australian, and we think, what did the author mean when they used that word investment? And then if we think, what did all the readers mean when they read the word investment? And what I know after doing this on a number of occasions, if there were 20 people in this room and I asked all of them to write a definition on investment, there would be as many definitions as there are people in the room. So let's define investment, because it's often misunderstood. Now, we put three criteria to the word investment. Firstly, it's long-term. Now, my daughter Camilla, who's 30, long-term for her, that might be a 40-year plan. Me at 63, I know I don't look like it, but 63, that could be a 20-year plan. But we need to address long-term in regard to the investment class. Because years ago, people might buy what they would talk about as blue chip shares and say, look, I'm going to own those forever, and put them in the side drawer next to the bed and never touch them again. But today, because of globalisation, because of the speed with which markets can communicate, because of the amassing of money, you know, just as a discussion or as an example in superannuation funds or workers' funds around the world, the fact is I just don't think that philosophy of buying shares and never addressing them again is the answer. So I'm confident, you know, many, if not all, financial planners would say a long-term strategy for equity investments would be 5 to 10 years. Now, long-term for property is absolutely minimum 10 years, 20 years, 30 years. Now, we would say, it might sound glib, but, you know, I've often been known to say that to be a successful property investor, you buy the right property in the first place, you put it in your back pocket and you never sell it. Now, that strategy is the strategy that has made so many of our clients, you know, well off and financially successful, because the ones that did that from 1980 when we started, if they've done it to now, they're the ones that have really gained and benefited. So 10-year plus is the answer for long-term. Second, must be non-speculative, and we know what we're saying there is that we know the underlying supply-demand circumstance of a particular investment market, and a particular investment is such that we know if there are changes that that particular investment class or that particular investment won't lose value quickly. And the third criteria is that it must attend to itself. So what we're saying there is that yes, you might receive a dividend statement, or you might receive rent and you have to bank the rent and bank the dividends, or you might have a change in tenancy and make a decision around that. But fundamentally what we're saying is that the investor does not have to in any way get really involved with the performance of the investment. So if you find yourself up on a Wednesday looking at the financial review and the share prices, deciding whether you buy or sell, you're a share trader or a share speculator. If you buy a property with the thought that you might develop it, you're a property developer, you're not an investor. So 3 criteria for investment: long-term, non-speculative, the investment must attend to itself. Now, given that those criteria for individuals, what is it that investors want? Well, they want the highest returns they can get. So in returns, we include capital growth, income growth, confidence of income, and an appropriately high initial yield. They want high returns. You want high returns as an investor, but what you need, as equally as importantly as high returns, is security and flexibility. Now, often forgotten. And what I would say to you is that you should really invert that list and say, I demand that I have flexibility within my investment strategy and my particular investments. I demand that I have security, because what I can say to you with property, if you have flexibility and security at the levels that we would want you to have it, appropriate returns would be accompanying that investment over the medium to longer term. So flexibility, security, returns, security, flexibility, they are crucial. All 3 of them. Now, where do you find that in property? As far as we are concerned, you'll find that in property that has continuing strong demand of both tenancy and sale for now and for the foreseeable future, as determined by an individual or organisation with an appropriate criteria base, making a judgment on a specific class of property. Now, there are basic principles with regard to investment strategy for individuals, taking it right through to making judgments on property. Now, in summary, what that has meant in terms of our philosophical stance with regard to the category of property that we recommend that our clients purchase, in summary, it's medium to high density residential property in the best inner urban areas of a major metropolis. Now, if I take that out to our longer discussion, it would be this. We recommend that our clients purchase property in the best inner urban areas of a major metropolis from a demand, popularity and opportunity point of view. We recommend that they purchase property in those best inner urban areas that most people wishing to either own or occupy property can afford. We recommend they purchase property most appropriate for a long-term investment, namely to do with physical maintenance and tenancy management. So that means small property in good condition. So it could be small houses, townhouses or apartments in those best inner urban areas of a major metropolis. And we recommend that our clients purchase property most appropriate to their particular circumstances. Very often that's either financial, tax, or portfolio balance issues. So if somebody has 5 properties in Sydney, it's a very good idea to buy a property in Brisbane or buy a property in Melbourne. From a tax point of view, Divisions 40 and 43 of the Taxation Act, which relate to the depreciation of fixtures and fittings, and the building allowance, where there are non-cash tax deductions, which mean that we can purchase new property and get a real benefit from tax, which means we can own more property and it costs us less. And when it comes to financial, it could be issues to do with buying property before it's developed, so we'll be saving stamp duty and so on. So you can see that longer statement is very specific in its in what it addresses, and I can assure you that that whole statement is what we're fundamentally followed with for the last 34 years and in terms of our recommended property. Now, what I'd like to do, because we're talking about Brisbane today and I've gone through those basics with you, is to talk about major metropolises. And the first thing is to go through our definition of what is or what isn't a major metropolis. Now, fundamentally, our definition is this. We say where, if there is a change of one or two or three things that change the underlying supply-demand circumstance of a property market to such a degree that it either changes capital values or income levels, then it is not a major metropolis. And the example that I often use is Canberra. I was speaking there 25 years ago to a group of financial planners and accountants, and I explained to them that if in fact we had a change in government in Canberra and the incoming government allowed the public service to increase by 5% or it reduced the public service by 5%, you would change the underlying supply-demand circumstances of property and thereby change either capital values or income levels. And therefore, as far as we're concerned, Canberra is not a major metropolis because one thing that can happen and impact that market. However, if we look at Melbourne and Sydney, we could have a change of one or two or three things, but we will not change the value of that apartment in Kirribilli or that Victorian terrace in Albert Park or its ability to bring a rental income or its level of rent, the flat in Kirribilli or the Victorian cottage in Albert Park. So if you can understand my point. Now the issue here is that what is and what isn't a major metropolis as far as we're concerned is absolutely crucial in determining what individuals should be investing in, and what we're saying is the major metropolis is solid, is secure, it doesn't respond to any particular issue. We can have overall downturns in the economy, or we can have changes in property cycles, but it won't be one or two or three things. So the two fundamental indicators of what is or isn't a major metropolis in regard to our definitions: firstly, population size, and secondly, a strong and independent economy. So firstly, population size, secondly, a strong and independent economy. Now when it comes to Brisbane, the population of Brisbane, Greater Brisbane, is just over 2 million people, about 2.2 million people in the Greater Brisbane. Brisbane itself is around about 1.8 million people. And for the last 34 years, we've recommended that Melbourne and our clients purchase property in both Melbourne and Sydney, in the best inner urban areas of Melbourne and Sydney. And it was about 6 years ago that we determined by our definition that Brisbane had become a major metropolis. And when I talk about the Greater Brisbane, and when we talk about Brisbane, often you will see written articles about Brisbane and what's happening to the Brisbane property world and so on, and they'll talk about SEQ, and people get confused and believe sometimes that they really are focusing mostly on Brisbane, which isn't correct, because the term SEQ refers to southeast Queensland, and you can see from the diagram that we've shown you here, southeast Queensland goes from the New South Wales and Queensland border right across to right up, so I should say, up to Noosa, and then quite a way inland from Brisbane. So don't be confused when people are talking about southeast Queensland. As far as I'm concerned, if they're discussing property in southeast Queensland, it is just a nonsensical conversation, because there is so much variation in the different categories of property and the various property markets that it is nonsensical, that just you can't talk like that. So I'm not talking about SEQ, and I'm not even really talking about Greater Brisbane. I'm talking about Brisbane, which is population of around about 1.8 to 1.85 million persons. So looking at Brisbane in terms of why we would or wouldn't believe it to be a major metropolis, and firstly, as I said, the first indicator is to do with population size. Now, Melbourne, with a population of 4 million persons, and Sydney with a population of 4.4 million persons, you know, no question, even worldwide, you know, they are relatively sizable metropolises, and so no question in regard to them being, in our view, considered major metropolises. But Brisbane's population of 1.82 million persons, you know, as far as we're concerned, is a sizable population, and on that basis, the population aspect of our judgment is fine. I mean, we don't recommend Perth, and in a moment I'll explain why we don't recommend Perth. But the issue to address next, after we discuss population with regard to Brisbane, is whether or not Brisbane is a strong and independent economy. And in regard to population, as you can, I think, see, Not only is it a sizable population, but in terms of growth, Brisbane has the greatest percentage growth of all capital cities in Australia. Its growth since 2006 to 2011 was 12.1%, and that growth rate is expected to continue, well and truly into the future. So, in terms of population size, Brisbane's got it. The issue is to do with its strong and independent economy. Now, one of the interesting things I think about Queensland and Brisbane is that the percentage of the population that lives in Brisbane, specifically in relation to the state of Queensland, it's around about 40%, where in Melbourne and Sydney it's the reverse of that. It's around about 60 to 65% of Melbourne and Sydney's population live within the metropolises, and the balance lives in the other part of the state. So what we have is a substantial population external to Brisbane, and if we look at the economy of Queensland, we have a substantial resources economy, a substantial rural economy, we have tourism, we have a burgeoning financial services sector in Brisbane itself, and we have the grain population moving to Queensland, which has had a real impact on population growth in Queensland over recent decades. So it is a very diverse economic base for the whole of Queensland, which in terms of being the metropolis of Queensland, or the capital of Queensland, Brisbane is the benefactor. So as far as we're concerned, Brisbane most definitely does have a strong and independent economy. And I often discuss with people the issue of why Brisbane and why not Perth, because the population of Perth and Brisbane are very much the same. It's about 1.8 million persons in Perth, 1.8, as I've said, in Brisbane. And, I explain to people that the reason we don't recommend Perth is because it passes the population test, but it doesn't pass the strong and independent economy test, because it may have a strong economy, and particularly for the last 10 to 15 years in terms of the resources boom, it has had a strong economy. That's Western Australia generally, and Perth particularly, but it's not independent. And it is very much not independent because it does respond, that the Perth economy does respond to the resources sector alone. And a good friend of mine, Gavin Hegney, professional friend of mine, Gavin Hegney, who really is a very well-educated property person in Perth, was explaining to me about a year and a half or 2 years ago. He said, John, the drop in the value of iron ore from about $160 down to about 70, I think it was. He said, do you know that the Western Australian government, for every drop in $1 value of iron ore, they have to take off, I think it was 3.3 million off their balance sheet. So in fact, that would have totaled at about that moment about $1 billion off the balance sheet for Western Australia because of the drop in the value of iron ore. Now, the point I'm making is that you can't have those sorts of impacts on an economy and not impact your property markets, because they will be impacted. So if you can see the difference is that in Queensland and Brisbane, we have a really diverse economic circumstance: resources, rural, tourism, and financial services within Brisbane itself. So hence, 6 years ago, we made a judgment that Brisbane was a major metropolis from a property point of view, and since then we've been negotiating properties in Brisbane for our clients to purchase. I think an interesting point, with regard to Brisbane in terms of its future is the continuing growth in population, which by all the powers is said that it will continue at the rates that it has been over the last decade and two. I think also, though, is the commitment of the Queensland government to its infrastructure, because presently there's about 17 billion committed to be spent. Between now and 2031, I understand there's around about 134 billion to be spent on infrastructure, and I think those particular facts in terms of growth and confidence of the Queensland government and the federal government in Queensland and Brisbane itself are very positive indicators that what we see now is going to continue into the future. There are varying idiosyncrasies that apply to different property markets, and in regard to Brisbane, one of them, could be that you know, if you think of Sydney and we have the harbour, and, you know, it's often said that people who live in the eastern suburbs don't even know how to drive to the lower North Shore, and vice versa. And in Melbourne, if I said to you, to all the people, I should say, that live in Fitzroy, this is your lucky day, would you like to move to Port Melbourne? People in Fitzroy would say, I don't think anybody would say yes. And I think they'd say something like, you kidding? You know, we don't want to live in Tinseltown with all those new buildings and new apartments. But equally, if we said to people that lived in Port Melbourne, you know, do you want to live in, would you like to live in Fitzroy? I'm certain that nearly nobody from Port Melbourne, that's modern Port Melbourne today, Port Melbourne, would say they want to go to live in Fitzroy, because they'd say, well, how did we do that? We're so close to the city, we've got the beach, we've got this magnificent shopping centre and all these beautiful tree-lined streets and new properties and so on. So Brisbane's like that with north and south of the river. And the river is very confusing for those people who don't know Brisbane, or those of you that do know Brisbane. I'm certain you'll agree with me. Getting to know Brisbane property markets isn't straightforward, because, you know, north and south of the river, but because the river curls so much, you know, it's very hard to figure out where you are. But, you know, that idiosyncrasy is one of the very important considerations in Brisbane. I mean, another very important consideration is transport. Now, whilst transport is obviously important, doesn't matter where you are, so whether it's road transport or whether it's public transport, in Brisbane it is so important that you could be in one side of one suburb that isn't near either a public transport or a freeway, and you will really impact the value. Now, it's much more impactful, public transport, it's much more impactful in terms of underlying demand of both occupation and ownership in Brisbane than it is in either Sydney or Melbourne. So north and south of the river, public transport is, you know, crucially important. And if we, you know, have a look at the north side of Brisbane, and thinking of some of those idiosyncratic situations on the north side, where the city of Brisbane is, you know, New Farm right through to Tenerife has been developed, if I guessed, over the last, say, 15 years with new apartments. Mirvac did a beautiful development in New Farm, one of the first, and I also remember that Macquarie Bank took over a development in Tenerife, you know, that was a big failure during the, I think it was during the early 90s and during that recession that we had to have. And so even as recently as those times, that all of that area has been filled in, and it's really, really very popular and very strong. But we could go to the other side of the city, Spring Hill, out to Milton, which is, you know, which is a beautiful inner urban area. But Brisbane, in terms of its idiosyncratic circumstance with regard to its property markets, is not like Melbourne and Sydney, where, because I think it is the size of the population, that we can have one area that we would be very confident about that is not a speculation, and then we can know that the underlying demand over time, you know, not decades and decades, but over 2 years, 5 years or 8 years, will morph into a nearby area. So, for example, in Melbourne, we've had a situation where Carlton, as I'm certain many of you would be aware, has been very popular in an urban area for a number of decades. And then North Carlton. And we used to say to people, we'd say, yes, and we recommend South Brunswick. Well, that morphing of demand has absolutely gone through to not just South Brunswick, but right through to the whole of Brunswick. You know, we've just recommended our clients purchase properties in a development called Tip Top that's been developed by Little Properties. And you could throw a stone from this development to Lygon Street. And I say to people, and if where that stone landed, if you stood there and you threw a stone north and a stone south, you'd probably go past about 20 restaurants that are all at night time just flat out. Now, restaurants don't make property markets, but underlying demand and activity make restaurants, and it says so much about, you know, the Brunswick property market in terms of demand from owner-occupiers and demand from occupiers or tenants to live in the area. So that morphing, you know, from Carlton, or morphing from Richmond to Collingwood and Abbotsford, or North Fitzroy to Fitzroy itself and through to Collingwood and Abbotsford, that sort of morphing can happen. In Sydney, you know, it was Surrey Hills through to Waterloo, and now further south from Waterloo to Marrickville and areas down south. So that morphing happens, I think, because of the size of the population. But we need to be very careful in Brisbane. We need to be very much more careful in terms of choosing locations. So Fortitude Valley, which is on the northern side of the river. Yeah, you may well know, if you know Brisbane a little bit, you would know that Fortitude Valley is extremely popular. It's like, you know, it is very much like, if I think of, say, Melbourne, it's like St Kilda or Paran. It's just got that absolute demand and that fervour and that activity which, you know, which human beings want, especially in inner urban locations. So it's got the restaurants. But next door to Fortitude Valley is Bowen Hills. And whilst, you know, Bowen Hills has the Brisbane Hospital and people talk about that, there's quite a lot of land to be developed in Bowen Hills. And what you will notice is that nearly every development in Bowen Hills refers to Fortitude Valley. So in other words, they're selling their developments in Bowen Hills off the back of this extreme popularity of Fortitude Valley. Now, it is our view to be very careful in most parts of Bowen Hills. Now, Lendlease have a development of the old showgrounds that they're doing, and that's right next door to Fortitude Valley in Chinatown in Brisbane. And I really believe, and knowing Lendlease as we do, they'll do a great job, that over time that particular development will be fine. But, you know, those other developments in Bowen Hills that need to sell themselves off the back of Fortitude Valley, as far as we're concerned, one needs to be very careful about. So I say to you to be extremely careful in terms of moving from one suburb to another. I mean, another issue in regard to Brisbane is you know, there's been a huge development on the river out near Hamilton. And Hamilton is next door to Ascot, and Ascot, as you could be aware, is the Wallara or Double Bay of Sydney, or the Toorak of Melbourne. And off the back of this reputation of very expensive suburbs are these apartment buildings, and been well developed, no issues about that. And the whole area's been well planned, and it's on the river, and it's great. But it's too far from the centre. It doesn't meet that inner urban criteria that we talk about, that is to do with centralised transport, public and road, and you know, that pool of inner urban areas that you would find in around New Farm or Milton or Spring Hill or sort of West Brisbane or South Brisbane and those sorts of areas. So south of the river, South Brisbane and you know, West End and Highgate Hill, right through to Hawthorn and Bulimba and those areas near the river, they're all beautiful areas, good inner urban areas, and yet the river's confusing a bit, but most definitely given the fact that they are close, there's no question. We've just recently recommended our clients purchase apartments in a building in West Brisbane, and it's just right on the river, and it's a lovely development. So the north, Fortitude Valley and some of those locations, yes, very exciting, but equally as important, and we are very confident we'll have future demand, certain locations on the south side of the river. But I just warn you again, it is very important to be very careful about moving just from one suburb to another. It's very important to investigate the availability of public transport, you know, just in the one suburb itself. So we've discussed the differences. Let's just say in summary, everybody, with regard to the things that I've been talking to you about, must stay with major metropolises. Absolutely crucial as a long-term investor. Don't be swayed away from Melbourne, Sydney, Brisbane. That is where your success will be. That is where your children's success will be. I have no doubt in saying that to you. Do not be swayed away from major metropolises. We need a balance for a spread of, in our investment portfolio, for a spread of investment and a spread of risk. So if you've got property in Melbourne or Sydney, it's a good idea to be in Brisbane. If you've got a lot in Brisbane, it's a good idea to buy something in Sydney and buy something in Melbourne. In terms of Brisbane and today's timing, if I can say to you, the issue is this. Certain markets get so hot. At the moment, Sydney is so hot. It is just hard to negotiate quality, and properties sell so quickly at such high prices in the sorts of locations that we look for, that getting access to it, you know, for our clients at reasonable price is hard. Melbourne had its run about 4 years ago, and to be accurate, don't believe all the headlines you read about the hot Melbourne market. The Melbourne market presently, you know, is quieter than it was 3 or 4 years ago, which is a positive thing for us because it means we can access quality at a reasonable price for our clients. But in terms of the future growth, we're very confident about Brisbane and confident about our clients purchasing really good quality at the right price with all the things that we see as upside into the near future. So, ladies and gentlemen, I'm going to finish there. If there are any questions that you might have today or in the future, we'd be delighted to hear from you. So you could email us or telephone us on the number that you see on the screen and speak to us about our thoughts about Brisbane or generally any property investment matters or your particular circumstances. So good afternoon. I hope this has been a worthwhile investment of your time to discuss Brisbane with you. Bye-bye.